guys, welcome to Talking Money with Nozi Personal Finance Made Simple. One day you will be too old to work for money. You will be too old to be employed or to work for yourself. But you're going to need money to buy food, clothing, medication, etc. Where will that money come from? That money must come from your investments. By the time you are no longer able to work, you need to have an investment or investments that are big enough to pay for your expenses for the rest of your life. And the time to start building those investments is now when we are young, not when you are 60 years old and retirement is knocking on the door, right? The time is right now. And that is why today's video is about retirement annuities. This account is just one example of how you can start preparing for your retirement. First, what is a retirement annuity or an RA? A retirement annuity or RA is a retirement fund and it is governed by the Pension Funds Act. All investments that go inside an RA, for example, unit trusts, ETFs, cash, or listed property are protected from tax because you don't pay tax on any investment returns like interest, dividends, and capital growth. Retirement annuities are for those who are self-employed, those who don't have a pension fund with their employer, those who want to make extra contributions towards their retirement in addition to their employer's pension or provident funds, those who earn extra income that is not related to their jobs like interest income or rental income or income from side hustles or a business. Let's talk about the advantages of retirement annuities. Advantage number one, money that you put into a retirement annuity is subtracted from your taxable income. Basically, you pay less tax. However, there are limits on how much tax you can claim back per year. A maximum of 27.5% of your income and no more than 350,000 is tax deductible in a tax year. You can contribute more than that, but after you've reached those limits, your contributions are rolled forward and deducted in future years. Also, this limit applies to all your retirement funds combined. This includes your retirement annuity, your pension fund, and your provident fund. Advantage number two is that all growth like interest, dividends, capital growth is tax-free. Advantage number three, you get tax rebates, which you can use to contribute to your RA and create a snowball. Let's say you earn 250,000 Rand a year. If you contribute 10% of that, which is 25,000 Rand to your RA, then you would qualify for a rebate of 6,500 Rand. If you contribute 20% of that, which is 50,000, your tax rebate increases to 13,000 Rand. You can actually use those rebates to contribute to your RA and you'll get rebates on those rebates again in the following tax year. So you're actually snowballing your retirement annuity. How do you know how much your tax refund or rebate will be? You multiply the amount that you have contributed to your RA during the year by your tax rate. This is the SARS website and we are looking at the rates of tax for individuals. The tax year is 2022, which started in March 2021 and will end in February 2022. So these rates are definitely going to change for March 2022 to February 2023. So it means you'll have to come and check on this website what those updated rates will be. But for now, let's work with what we have. So let's say you're earning 250,000 Rand a year and you contribute 10% of your annual income to your retirement annuity, which is 25,000 Rand. Your rebate will be 25,000 Rand times 26%. That gives you 6,500 Rand. So SARS will give you a rebate of 6,500. What if you contribute 20% of your annual income, which is 50,000 Rand? Well, your tax rebate will be 50,000 Rand times 26% and you will get 13,000 Rand. So SARS will give you a rebate of 13,000 Rand. Advantage number four is that your retirement annuity is protected from creditors. Only 3,000 Rand can be taken from your retirement annuity to pay creditors, the people that you owe, right? However, this rule does not apply to tax that is owed to SARS and to child maintenance claims. Guys, you cannot run away from maintenance, ne? Advantage number 5 is contribution flexibility. You have complete flexibility when it comes to contributing to your retirement annuity. You are able to stop and to start your contributions as and when you choose without any penalties. You can contribute to your RA every month or once in 3 months or once a year. You can contribute manually whenever you have money. This is very helpful to people who don't have a regular income. This is people who are self-employed or who have side hustles and you can't always contribute every time. Advantage number 6 is that retirement annuities are locked until you are 55 years old. This is a good thing because it forces you to be disciplined and only use your RA funds when you are much older and closer to retirement or retired, and not necessarily when you are still young and job hopping, right? Many people withdraw from their retirement funds when they are changing jobs, but with the retirement annuity, you cannot do that unless you are 55 years and above. Now, let's talk about the disadvantages of retirement annuities. Disadvantage number 1 is that the money in your RA cannot be touched until you are 55 years old. This can be a problem if you plan to retire before you are 55 years old. It means that money is locked, you can't access it. And now if you want to retire, what happens? You can't do anything. Disadvantage number 2 is the pension fund rules. Retirement annuities are Regulation 28 compliant. Regulation 28 is a bunch of rules that controls how much pension funds, like retirement annuities, are allowed to invest in certain locations and in certain asset classes. For example, the rule states that no more than 25% is allowed to be invested offshore outside of South Africa, and no more than 75% is allowed to be invested into shares. These rules are designed to protect people from going overboard and exposing their retirement funds to too much risk. That's fair enough, but personally, I think that these rules are too limiting because if you invest in pension funds or retirement annuities, your investments are overexposed to South African investments. And guys, remember, South Africa only makes up less than 1% of the investing world, and it means you are missing out on a lot of investments outside of South Africa. Another problem that I have with this is the limitation on equities, which is 75%. But equities or shares are the number 1 asset class in terms of the ability to grow your investments. So limiting your exposure to shares or equities means that the growth to your investments is also limited as well. Disadvantage number 3 is that income from your retirement annuity is going to be taxed later when you're now retired. And the problem with this is that nobody knows what the tax will be when you are much older, when you are 55 years or older. What if the tax is much higher when you're older than it is right now? Disadvantage number 4 is that you cannot get all of your money as cash unless it is below 7,000 Rand. Once you make it to 55 years or older and you are ready to enjoy the benefits of your retirement annuity, you are not allowed to withdraw all of your money. You are only allowed to take 1/3 of your retirement annuity as cash, and you have no choice but to buy an annuity product with the remaining 2/3. That annuity product will pay you a regular income until your money runs out or until you die. Personally, I don't like that restriction to my investments because I would actually like to allocate my money whenever I want and not be forced into buying an annuity product. That's it about the disadvantages and the advantages of retirement annuities. The 2021 tax season ends on the 28th of February 2022. If you want to receive tax rebates this year, you need to beef up your RA contributions before the 28th of February. If you contribute after the 28th of February, you will only receive your tax rebates next year during next year's filing season. Okay guys, that's it for today's video. In my next video, I'll be talking about using your tax-free savings account, your TFSA, to invest for your retirement. I will also talk about its advantages and disadvantages. If you don't want to miss that video, please give this video a big thumbs up and subscribe to my channel so that you receive a notification when I post that video. Until then, bye guys.